Today's update is important for every senior, retiree, and disabled American who depends on Social Security, SSI, or SSDI to pay monthly bills. Over the past several months, many beneficiaries across the United States have noticed something troubling. Their deposits are arriving on time, but the amount available to spend is sometimes less than expected. For many people, this has led to confusion, worry, and frustration. This is not because Social Security benefits were reduced by the government, and it is not because payments were delayed. Instead, new and changing bank fees are quietly taking money out of accounts, often without people realizing it right away. This update explains what is happening, why it matters, and what seniors need to understand to protect every dollar they depend on. Social Security, SSI, and SSDI payments are meant to provide stability. These benefits are designed to help older adults, people with disabilities, and survivors cover essential costs like rent, utilities, food, medications, and transportation. For many households, these payments are the primary or only source of income. Even a small fee of $5, $10, or $15 can make a real difference when budgets are already tight. That is why recent changes in bank policies have caused so much concern among beneficiaries. The first thing to understand is that Social Security itself is not charging new fees. The monthly benefit amounts approved by law are still being paid in full by the federal government through the Social Security Administration. The issue begins after the payment reaches the bank or financial institution. Once the deposit arrives, certain banks apply account fees that can reduce the usable balance. These fees vary by bank, by account type, and sometimes even by how the account is used each month. One of the most common problems involves monthly maintenance fees. In the past, many seniors were able to avoid these fees by meeting simple requirements, such as keeping a minimum balance or receiving a direct deposit. Recently, some banks have raised minimum balance requirements or changed the conditions needed to avoid fees. As a result, beneficiaries who previously paid nothing are now seeing monthly charges deducted automatically. These fees often appear quietly on bank statements, making them easy to miss. Another growing issue involves overdraft and insufficient funds fees. Many seniors rely on automatic payments for utilities, insurance, phone bills, and subscriptions. When the timing of these payments does not line up perfectly with Social Security deposit dates, accounts can briefly drop below zero. Banks may then charge overdraft fees, sometimes multiple times in a single month. Even if the account is only overdrawn for a short period, the fees can add up quickly and consume a large portion of a benefit check. In recent months, some banks have also introduced new transaction-related fees. These can include charges for using out-of-network ATMs, fees for paper statements, or fees for certain types of transfers. While each individual fee may seem small, together they can significantly reduce the amount of money seniors have available for essentials. For someone living on a fixed income, these unexpected deductions can create stress and uncertainty. There is also growing concern about fee changes tied to account reclassifications. Some banks have moved customers from older account types into newer ones with different fee structures. In many cases, these changes happened automatically, with notices sent by mail that were easy to overlook or misunderstand. Seniors who did not respond or did not fully understand the changes may now be subject to higher fees than before. For SSI and SSDI recipients, the impact can be especially severe. These benefits are often lower than standard retirement Social Security payments, leaving less room for unexpected costs. When bank fees take even a small portion of these payments, it can mean choosing between groceries, prescriptions, or utility bills. This is why it is so important to understand how these fees work and how they affect monthly income. Another issue affecting beneficiaries is the growing use of prepaid debit cards and alternative financial products. Some people receive benefits through government-issued cards or private prepaid accounts. While these options can be convenient, they sometimes come with their own set of fees, including charges for withdrawals, balance inquiries, or inactivity. If not carefully managed, these fees can slowly drain funds over time. Many seniors assume that because their benefits are protected under federal law, their money cannot be touched. While it is true that Social Security benefits are generally protected from garnishment for most debts, bank fees are different. Banks are allowed to charge fees based on account agreements, even when the only money in the account comes from federal benefits. This is a key point that many people do not realize until they see their balance reduced. It is also important to understand that fee policies are not the same everywhere. Some banks continue to offer accounts specifically designed for seniors or benefit recipients, with low or no monthly fees. Others do not. This means two people receiving the same Social Security payment can end up with very different amounts available to spend, depending entirely on where they bank. Communication plays a major role in this problem. Banks often notify customers of fee changes through mailed letters or electronic messages that are easy to miss. Seniors who are not comfortable with online banking or who do not regularly review statements may not notice changes until fees have already been deducted. By then, the money is gone and recovering it can be difficult. The timing of deposits can also create confusion. Social Security payments are made on a set schedule, but weekends, holidays, and bank processing times can affect when funds are actually available. If bills are scheduled too early, fees can be triggered even though the deposit is technically on the way. Understanding this timing is crucial to avoiding unnecessary charges. This issue has become more visible because more seniors are speaking out about their experiences. Many have noticed patterns of recurring fees that did not exist before. Others are seeing new charges labeled in unfamiliar ways. While each case is different, the underlying issue is the same. Bank policies are changing, and beneficiaries must stay informed to protect their income. As we continue this discussion, it is important to remain calm and focused. This is not about panic, and it does not mean that Social Security payments are disappearing. Instead, this is about awareness and preparation. Knowing what is happening allows seniors to make informed decisions, ask the right questions, and take steps to reduce or avoid unnecessary fees. In the next part of this video, we will go deeper into what seniors can realistically do to protect their Social Security, SSI, and SSDI deposits. We will explain how to review bank statements, understand account terms in simple language, and identify warning signs that fees may increase. We will also discuss why this issue is becoming more common now and what it could mean moving forward for people living on fixed incomes. For now, the key takeaway is this: your Social Security payment is still yours, but how much of it you actually get to use can depend heavily on your bank's policies. Paying attention to those details is no longer optional. It is an essential part of protecting your financial security in today's changing environment. Now that we have clearly explained what is happening with new and changing bank fees, it is important to focus on what this means for seniors in real life and how these fees quietly affect everyday decisions. Many older adults plan their entire month around one Social Security, SSI, or SSDI deposit. They know exactly how much is coming in and exactly where that money needs to go. When bank fees reduce that amount without warning, it can disrupt carefully planned budgets and create unnecessary stress. One of the biggest challenges for seniors is that bank fees often feel confusing and hard to track. Statements may include unfamiliar terms, shortened descriptions, or vague labels that do not clearly explain why money was taken out. For someone who does not check statements frequently or who relies on paper mail, it may take weeks or even months to notice a pattern. By that time, multiple fees may already have been charged and the total loss can be significant. Another issue is that many seniors feel hesitant to question banks. Some worry about making mistakes, others fear that changing accounts could disrupt their benefit deposits, and many simply assume that fees are unavoidable. This sense of uncertainty can keep people stuck in accounts that are quietly costing them money every single month. Over a year, even small monthly fees can add up to hundreds of dollars that could have been used for food, medical care, or emergency savings. It is also important to understand that fee increases often happen during broader changes in the banking industry. Banks adjust their policies in response to rising operating costs, new regulations, and shifts in how customers use financial services. Unfortunately, these changes do not always consider the reality of living on a fixed income. Seniors who do not use online banking, who prefer in-person services, or who rely on paper statements may face higher costs simply because of how their accounts are structured. For many SSI and SSDI recipients, the situation can feel even more unfair. These benefits are already limited and designed to meet basic needs. When fees reduce an already modest payment, there is little room to absorb the loss. This can force difficult choices such as delaying prescription refills, skipping meals, or falling behind on utility bills. These are not minor inconveniences. They directly affect health, safety, and quality of life. Another concern involves timing and automation. Many seniors have bills set to autopay because it simplifies life and helps avoid late fees. However, if automatic payments are scheduled too close to deposit dates, even a short delay can trigger overdraft fees. Some banks charge these fees instantly, while others allow a short grace period. The problem is that policies vary widely, and what worked for years may no longer work under new rules. There is also the emotional impact to consider. Financial stress can take a toll on mental and physical health, especially for older adults. Worrying about money, feeling unsure about account balances, or being surprised by fees can lead to anxiety and loss of confidence. Seniors deserve peace of mind, especially when it comes to income they earned through decades of work or qualify for due to disability. Understanding account terms is a critical step, but it does not have to be overwhelming. Many banks provide summaries of fees in simple language if customers ask directly. Seniors have the right to request clear explanations of what they are being charged and why. Asking questions is not a burden. It is a reasonable and responsible step toward protecting one's income. It is also worth noting that some fees are optional or avoidable with small adjustments. For example, certain accounts waive fees if direct deposit is maintained, if a minimum balance is met, or if paper statements are declined. While not every option works for everyone, knowing what conditions apply allows seniors to make informed choices rather than guessing. Another factor to consider is the type of account used for benefit deposits. Some seniors have had the same account for decades without reviewing whether it still meets their needs. Over time, banks may phase out older account types or convert them into newer versions with different fee structures. Periodic reviews, even once a year, can reveal whether an account is still suitable for someone living on fixed income benefits. For those who feel overwhelmed, trusted family members or financial counselors can provide support. Discussing bank statements together, reviewing fees line by line, or calling customer service as a group can make the process less intimidating. Seniors should never feel ashamed for asking for help when it comes to protecting their income. This issue also highlights a larger lesson about financial awareness in retirement. Even when income sources are stable, expenses can change unexpectedly. Staying informed, asking questions, and paying attention to small details can make a big difference over time. Financial security is not just about how much money comes in, it is also about how much stays in your account. As we look ahead, it is likely that bank policies will continue to evolve. Digital banking, automated systems, and new fee structures are becoming more common. Seniors who rely on Social Security, SSI, and SSDI must stay alert and proactive. This does not mean constant worry. It means regular check-ins and informed decision-making. The most important message to remember is this: your benefits are meant to support you, not be slowly drained by fees you did not expect or understand. While banks have the right to set their policies, you have the right to know exactly how those policies affect your money. Awareness is your strongest protection. By understanding how bank fees work, recognizing changes early, and taking simple steps to stay informed, seniors can protect more of their monthly income. Every dollar matters, especially on a fixed budget. Staying engaged with your finances is not about fear, it is about confidence, control, and dignity. As we close today's update, remember what you have learned. Social Security, SSI, and SSDI payments themselves have not been reduced, but bank fees can quietly reduce what you are able to use. Paying attention to statements, understanding account terms, and asking questions can help prevent unnecessary losses. This knowledge empowers you to make better decisions and protect the income you rely on. Your benefits represent years of work, contributions, and eligibility earned under the law. They deserve to be handled with care and respect. Staying informed ensures that more of your money goes towards supporting your life, your health, and your peace of mind.